I would like to say Happy New Year to all. Hopefully, we'll make 2026 a good year, a year where we learn by working. It's again myself and Chantel with you. We will continue what we have started. So, Chantel, just say Happy New Year to all of you.
Hello, Happy New Year!
Okay. So, where did we stop last time? We were talking about
I think we were talking about history of money.
money. Very important. Very important. It is all the activities human beings do. Behind it, there is a money aspect. It's like the other side of the coin. If we understand the money side of things, will help us to understand the real things, the things that happen between us. So let's talk about what we are going to do in 2006. We'll continue this. We'll continue English. We will start this session from where we ended and continue like that. Hopefully, we are trying to understand this importance of money. We are trying to understand the behind the scene things. Okay, so money does three very important things to people, to all of us. Can we remind us?
Money is a
One.
medium.
Of exchange. So we need money to trade things, to exchange things between us.
It's like the middleman.
Before money, there was a system called barter. So you change things for things. People invented something called money, a medium of exchange, which makes the exchange of things easier and better and more efficient and possible. What is the other function of money?
The other functions of money are...
It's a measure of value.
Measure the value.
So you know how much is this worth compared to some other thing. You can compare their value. You can compare their price. Their price can only be with some money. When money is dollars, it will be dollars. But when money was wheat or gold, it will be in gold or wheat, or it will be in silver, or it will be in copper, depending on what money is, or some digital money or some cryptocurrency. Anyways, something that works as a media of exchange and something that measures value. We can evaluate things with money and we can compare things which are different in nature, but we can compare their monetary value. Two things now we said, medium of exchange and measure of value. Number three, also very important, which is store of wealth. Somehow people realize that there is a difference between income and wealth. Income is what you earn over a given period of time. Wealth is what you keep from that earning. Wealth is what you consume, what you earn minus what you consume. Like, when it accumulates over time.
Like what you save.
What you save is your wealth. What you keep is your wealth. And we know that people have different incomes and people have different behavior patterns, spending patterns, and thus they have different quantities or amounts of wealth. Some are wealthier than others. So three things. Can you repeat them?
One, to measure. Second one is to store. And the third,
medium of exchange.
Medium of exchange.
Store of value and measure of value. These are very important. Okay. Last time we said this paper money, the invention of paper money, is just like any other invention. It has nothing to do with money itself or the functions of money. So when technology allowed to have printers, to have good paper, the technology allows, the human knowledge allows you to have paper money. We had paper money. Before that, we had money also. But it was not paper, it was coins, gold and silver. Before that, it was maybe salt, maybe stone, maybe copper, something else. But all the time, human beings discover something money. Since they did barter, but sometimes also a mixture of barter and money. But all the time, the human beings need it and discovered early that they need a store of wealth. So mostly we talk about for the last maybe couple of thousand years or 3,000 years, we talk about people wealth being stored in gold and silver. That is what rich people do for many years, hundreds or thousands maybe of years. But they can store anything else. They can have other valuables. How do we add all this together and measure them? Is by having that measure of value. We have that money. So money is very important. We already talk about the evolution of money. Now we have digital money. Now we have crypto money. So it's all money. It's all they have the same functions. They provide the three functions of money.
Sir, I have a question.
Yes.
What is the difference between cryptocurrency and digital currency?
Digital currency is just what you have recorded on paper in your accounts. Cryptocurrency is a currency that the supply of which is limited by somehow some technology, some algorithm. The main difference between digital and crypto is that the supply of crypto is controlled to a great extent. It's not easy to have one additional Bitcoin. It is little bit comparable to the paper money, but it's not. I don't know the difference exactly, but it is all media of exchange. It is the crypto is done by production, some sort of production, some sort of algorithm that when you do, you have made one extra coin. So the supply is of crypto is restricted to a great extent. Digital, anything recorded, debit and credit is only in your system, in your mobile, in your account. It's digital. If we talk about in our real world, maybe the bulk of money that we have is all digital. The actual money, the actual paper money or coins or is maybe less than 10% of the total money we have. I don't know. Hopefully I understand, answered some of your questions. But crypto means the supply is very limited. Other than that, it is subject to demand and supply. Do you think we need to, man need to understand the movement of money? Let's say, how do we understand this money? Do we have to invent something now that people didn't know before about money, the importance of these functions?
People should learn like the importance and like the basics of money because
I think they have known this long time. Imagine, people, even it is, before the Bible, even before Judaism, all through the centuries, money was important. Wealth was important. We always had better off and worse off, rich and poor. What's the difference? Is how much they own, how much wealth they accumulate. They become rich, and others who don't have that wealth become poor. So all through history, money was important. And because it is important, we think understanding money and what money does was also important. And people knew this for a long time. And people knew who is richer than who. How? How do we know who is richer than who? How do we know? They must, people must have come up with some sort of measurement for wealth. I think people understood the importance of wealth, the importance of money so early in history that their main objective was how to manage how to handle, how to grow this. So
like what is their worth in terms of money, stuff like that.
okay, I think now we have reached, between me and Chantel, we have reached a stage that we need to know some mechanism, some understanding of wealth. I think people discover something called accounting. How do we add wealth? Wealth can be in money, Wealth can be in things like of value, of importance, like your house, your land, your farm, your car, your jewelry, your anything of value, anything important. We know we have so many things that we appreciate having, but we need to have some common value for them so we can add them together. And you hear about people talking about net worth. They say he has a net worth of this much, or she has a net worth of that much. How do we get those figures? How do we understand how much wealth we have? How much wealth we have? There's a concept, there's something called balance sheet.
I have another question. What is net worth?
Exactly, this is what you're coming to. Let's see what is net worth. Chantel asked, what is net worth? Okay, I will explain to you, but to explain what is net worth, I have to explain what is balance sheet. Let's look, I will ask Chantel to look it up. Just look in Google up or any artificial intelligence software or anywhere you are used to look up what is a balance sheet.
Balance sheet, also known as a statement of financial position, is a financial statement that provides a snapshot of a company's assets, liabilities, and owner's equity at a specific point in time. It is one of the three core financial statements, along with the income statement and cash flow statement, used to assess a business's financial health.
Okay, this is a very fancy name for a balance sheet. But the balance sheet is made based on an common sense equation. What's the balance sheet equation?
Assets is liabilities plus shareholders' equity.
Assets equal liabilities plus shareholder equities. It is an equation. Equation means there's an equal sign. Actually, some people call it balance sheet identity. It is even stronger than an equation. Very, very important. Because wealth doesn't have any meaning if it doesn't belong to somebody. Yani anything valuable must have an owner. Right or wrong?
Yeah, that's right, because it can't go anywhere else. Like, it can't just disappear.
Yeah, yani nowhere does not exist. Belongs to no one also means it's not valuable. If it is valuable, it must belong to somebody. It must belong to somebody. That is, anything of value must belong to somebody. Otherwise, we don't know. Maybe they're important. Maybe they're important to our life, but to have value, to be able to put a dollar value to it, then it has to belong to someone. So for every individual or any entity, we call it entity, yani individual or establishment or organization, anything, we can talk about what assets they have, what are the belongings they have. So if I ask Chantel, what assets do you have, or what assets do Mr. Ahmed has, or what she will tell. For example, you have some money in the bank. This is number one. You will know, right?
Your money.
Money in the bank.
What important things you own, like your house,
your house,
your car,
maybe some jewelry, some gold, some silver, some coins, some anything, maybe some plants, some machinery, some anything of value, she will say. And if we add them together, how can we add a car plus a house plus some inventory plus some jewelry? How can you add these things? You know, from arithmetic, we know that we cannot add apples plus oranges. An apple and an orange will always be an apple and an orange. We can never say, add them together. But if we put a value to the apple, a value to the orange, we can add their value. So if an orange worth 3 dinars, an apple worth 2 dinars, if you have an orange and an apple, you have what is worth 5 dinars. You can add the dinars, you can add the dollars. So if we add all the dollar value, the dinar value, any currency value, any measure of value we use, if we add all our belongings, that is called our assets. Okay, so that is our belongings. But if we have debt, if we borrowed some money, if we owe some money to somebody else, that is called a liability. That is called a liability. So assets equals liabilities plus owner's equity. Or you can say assets minus liabilities equal owner's equity. Owner's equity, another word for it is net worth. So from all you have, you add the value of all you have minus what you owe others is called your net worth. Assets minus your liabilities. Liabilities is what you owe to others. So there is nothing in this equation that cannot hold. This equation will always hold, will always be true, to the extent that it is called balance sheet identity. In accounting, it is one of the three statements as Chantal just read to you. But maybe the most important is the balance sheet, is how much an individual or an establishment worth at a given point in time. And it changes over time. So what I accumulate, what wealth accumulation I have now is definitely different of what I will have after 10 years or what I had before 10 years, because wealth accumulates or reduces over time. And there are two things, two sources of it. Either it belongs to you or it belongs to somebody else. If you borrow it, if it is one of your liabilities, it belongs to them. But you are using it for the time being. By the time being, it's part of your assets. For example, you have a car. You have a car, you paid half the price, and half of it is installments. The half you paid is yours. So the car is worth 100,000. What you paid is 50,000. What is your liability on the car? 50,000. So your net worth is the car worth to you is only 50,000, even though you are using a car that is worth 100,000, but what belongs to you from that is only 50%. That is the total assets, the value of the assets minus what you owe others. Nothing else. It's either belongs to you or belongs to others. All your assets they have either belongs to you or belongs to others. Yani either the money God gave you, that is yours, or you borrowed it from somebody, from a bank, from an individual. Now you understand the concept of net worth. What is your net worth? Your assets minus your liabilities. That is your net worth. And people knew this and behaved like they knew this for thousands of years. This is not nothing new, nothing new. So among all the subjects that we teach in business school, we teach accounting, economics, we teach marketing, we teach finance, we teach business administration, and so on and so forth. I think the first thing invented, the first science that people knew among all these is accounting. Accounting, that is a measure of wealth. That is total assets, your total belongings minus what you owe to others. What is yours and what belongs to others. So when we say your net worth is positive, means what you have is more than what you owe others. So your net worth is positive. Because if you take total assets minus total liabilities, you get a positive number.
What if that liability had interest?
That interest is a completely different thing. The
Like,
issue of interest.
If you had a debt to a bank and then they gave you interest.
Okay, if you have some money, give you interest or you pay interest. Now, what she is asking introduce us to another thing that is also related to accounting, also very important to this idea of net worth. See, net worth is what you have, the income minus consumption over the years, your savings over the years becomes your net worth. But now, once you talk about interest, either gained or paid, profit that you make, salary that you make, expenses that you pay, here we are talking about income and expenditure. What is your income minus your expenditure is what is left, how much your wealth will accumulate. So the second statement, balance sheet is one of the statements. The second statement is the income statement. So we have human beings were very conscious of understanding how much income they make over a given period of time. How much income we made last month, how much income we are going to make next year, how much income we made last year. So measure of income. When it comes to a statement of income, it is income minus expenditure for a given period of time. That is normally accountants like the period of 1 year. So what happens, what you make in 1 year minus your expenses for that year is your net profit or loss. It is what you add to your net worth or you subtract from your net worth. Being on the, if it is a loss, it will reduce your net worth. If it is an income, it will increase your net worth. Okay, what in this talk you don't understand?
I don't understand.
If you want, you can tell us what you understand.
What I don't understand is like, why aren't balance sheets including the small things?
Okay, this is a very, very good question and smart questions because, first of all, they have this concept, this understanding, this concept of accounting is very important because, see, when I asked Chantel how much she worth or what is her belongings, she mentioned 4 or 5 things which are the most valuable. She thinks these are the things worth it. It is not common sense to say, okay, I have a car, I have a house, I have a piece of land, I have some gold, I have some jewelry, add them together, this is my net worth. Oh, wait a minute, I also have this pen, or I also have this razor. There's so many small things that is, they call them in accounting, they call them not material. Yani they are not worth it. Yani the cost of the paper you will write on it is more than the cost of the thing itself. So it will only confuse you. It will only add without significant any amounts, but it will only capture the space. So always accountants use that word. They will record only things that are material. You don't say, okay, I have all these things, but I also have this pen. How much? 25,000. If I put it on the balance sheet, it will take a line and the value will only be 25,000. I am adding 25,000 to 100,000, So accountants always ignore what is immaterial, what is not material, and what is not worth it. So that is why we don't record small things, especially, and we don't put those things in the balance sheet. Maybe recording income and expenditure because it happens repetitively, it happens over a period of time. Even small amounts can add up to be significant. So we take care when we talk about income and expenditure. Even small things maybe we can take because if we pay 25 cents every day for a year, it will be too much money, and so on and so forth. So while doing income and expenditure statement, sometimes called profit and loss, sometimes called income and expenditure, sometimes called income statement, different names for the same thing, but it tells you total income in a given period of time minus total expenditures for a given period of time for the same period of time will give you your net profit. My concern is that is this talk difficult to understand? You have to be a genius to understand this.
You just need just basically like the basics of accounting and the financial statements because you need to understand it to actually be able to live in the real world.
If you don't understand these things, I think you are missing something. Maybe you understand, but in your own way. But all humans, somehow they understand wealth. Somehow they understand if they are rich or poor. Somehow they understand income. Somehow they understand expenditure. And these things are very important and they have been important. Not for the last 100 years or for the last 1,000 years. I think since the very beginning, since human beings just came to existence, to wealth accumulation and wealth maximization was at the edge of their priorities.
Like even before it was money, it was bartering. Before bartering, it was sharing.
See, the need for exchange is very important because without exchange, life will become very difficult. Imagine somebody who only catches fish and eats fish all his life. because there's nobody to exchange fish with bread, with something to drink. He will only drink water and eat fish all his life. What he will wear, what he will wear, what he will drink, what he will eat. We need to exchange. We need to barter. You need transportation. Our needs are not limited to what each of us can produce. Actually, this idea of exchange, a media of exchange, is very important, and people discovered this long time ago. Even barter. At that time, there was some. I think wheat, grain, yani, is one of the earliest currencies and stayed like a main currency, even until recently, even after we had the paper money and stuff like that. In some places, they only produce that thing, that crop, and they use that crop. They use what they have in wheat and grain, and to buy other things. So they will buy their fruits, giving grain. They will buy their bread, giving whatever ready. They will, yani, bread is grain, but they will buy their animals, their animal feed, all their needs, their requirements. They will buy using their what they have. It can be dates, it can be salt, anything of value that other people accept as a media of exchange. We will appreciate, and people will take care of that, and people will accumulate that. So even though the forms of money evolved different through the years, over the ages, but the concept of wealth, the need for media of exchange, the accumulation of wealth, the measure of wealth is the measure of value is yani, has been important since long time ago. We think everybody has to have a basic understanding of this. This is not only to be taught in business schools. This is not only to be taught in MBAs. This is every teenager should know this. Maybe we will not ask kids, but from this age, Chantal age, and onwards, we should have some understanding. And it's not difficult. So now we know the balance sheet equation: assets equals liabilities plus owner's equity plus net worth. Sometimes they call it capital. Anyhow, what you have minus what you owe others is your net worth. You can play with that equation as long as the equal signs will always hold. The equal sign, actually, some people, we normally put 2 lines for equal, no? For balance sheet, they put 3 lines. 3 lines, when you put 3 lines, parallel lines means identical. This side is identical to this side. Yani more than equal even. It is identical. So sometimes people refer to this as balance sheet identity. So now we know something. We know that because of the importance of wealth, we need something to measure it, we need something to store it, and we need wealth increase or decrease because of exchange. So we take care. Another statement is required to measure our income and expenditure. So income expenditure is measured over a period of time. It is the circular flow of income, of wealth, but over a period of time. So what you pay and what you receive over a period of time is called your income statement. And what you have in a particular point in time is your balance sheet. What you have minus what you owe. So balance sheet is more like a picture. It gives you your financial position in a given period of time, in a given moment of time, while income gives you what you have done, what happened between a moment in time and another moment in time. So, accounting speaking, what happened from the beginning of the year to the end of the year, you had this balance sheet at the beginning, you had this balance sheet at the end of the year. What happened in between the two balance sheets during that 1 year is the income statement. It's normally income you have generated minus expenditure you have to pay, you have paid, leaves you with the surplus that you can either add to your wealth if it is positive, or reduces your wealth if it is negative. Hopefully now she understands. Hopefully we all understand. So it is this balance sheet thing. Because of the importance of wealth, because this is very important to human beings, we need to understand what is a balance sheet and what is an income statement. Balance sheet is an equation, an identity. Income statement is an equation, but it belongs to a period of time, while a balance sheet belongs to a moment in time. One is like a picture, snapshot. One is like a video. Tells you what the story, what happened between two pictures. If I take Chantal's pictures now, this picture shows that she was here at this moment in time. 5 minutes before, 5 minutes after, the picture will not tell you. You have to have a video to explain to you what happened during these 10 minutes. 5 minutes before, 5 minutes after. That is an income statement. I told Chantal at the beginning that I'll be doing most of the talking for the time being. She needs to understand these things. She has her own understanding. I am adding the common understanding, and that we all understand what is taught in the business school under the subject of accounting. Slowly, slowly, we will also go to other subjects they teach in the business. And you want to add anything? She's fine. You understand the concept. If you take this in your business school, you think something difficult? It's not difficult. Actually, most people understand this. Balance sheet is not what I have discovered. It's not that we have discovered balance sheet. It's not that we are telling you something new. This exists. This is an identity that exists. This is, everybody knows this. Everybody understands this. For thousands of years, if you go back thousands of years, people understood what is balance sheet. Since the days of, I'll speak a little bit in Arabic, قارون, نبي يوسف. هاي قصص قبل الرسالة المحمدية، قبل الإسلام بصورة عامة. من أول الخليقة كان الإنسان يهتم بالويلث والممتلكات مالته، وكان مع الأسف كان من ضمن الممتلكات بشع. يعني الناس كانوا يملكون ناس، وهذا بنتكلم عنه أكثر وأكثر. بس مهم جدا إحنا نحط قيمة علشان نقدر نجمع الأصول المختلفة، مجموع الأصول نحط القيمة لها. هذه القيمة هي أساس القدرة على الجمع. فإحنا ما نقول هذه بالانس شيت ولا نعلم بالانس شيت، كله موجود والناس تعرفه. بس إحنا الشيء الجديد اللي نبي نقول لكم إن هذا البالانس شيت هذه موجودة في القرآن، وهاي الطريقة من الشرح موجود في القرآن. إحنا ما في شيء تعلمناه، نعتقد ما في شيء تعلمناه في يعني تجاري أو في بكالوريوس إدارة أعمال أو في ماجستير إدارة أعمال. المبادئ مالته مش موجودة في القرآن، كلها موجودة في القرآن، ومنها البالانس شيت والإنكم ستيتمنت. وبنواصل معاكم في هذا المجال. So we'll stop here for this video and continue in future videos. We will end up by just wishing you a happy new year. Hopefully now you understand a little bit about something called balance sheet and why it is important, and something called income statement. Thank you so much. See you in the next video.